And again, if you're trading, and a quick, nice little quicker rotation here off of the 65 area, giving us our quick 2 points. And if you can trade over, if you're trading multiple contracts, you're taking some more off the table. Nice little quick rotation there against our 65 entry point, giving us good 2 points, 3 points here. Took no heat on that. Nice little pop, nice rotation off of it. And again, if you're trading multiple contracts, see if you can't have a trailing stop and take a little bit more than 2 or 3 points out of these trades. And this is a perfect example of how you could do that. All right. Nice little opportunity there for us. If you still have it, I would cover them there at the 58, which is our pivot. And so even though we are, again, you have to trade multiple contracts to be able to scale out, and or if not, you can just just have a trailing stop because you really took no heat on that trade whatsoever. It popped right up there for us and bounced right down. So nice little quick opportunity. All right, very nice way to get our first trade here on a Monday morning. All right. Every now and then, get lucky a little bit. So again, we talked about we'll get lucky in the sense that we don't have to work hard at. Sometimes we have to work on a trade. You got to manage it a little bit. It doesn't go against this. You have to come back to it. You have to decide what you want to do. Do you want to lessen the risk? Do you want to hold on to it? Do you adjust your stop? This one, you got to like the no-brainers, right? So the market is concerned, like I said, about inflation, and but because of some Fed governor who spoke up last week, and remember, bond yields were definitely over 4% in the in. Wait a second, what's going on here? Well, definitely over 4% in the on Friday or Thursday, actually, right? And things have turned around a little bit there in that end. Does anybody know if we have any news coming out? All of a sudden, I can't find that information that I usually have. Anybody knows that there's any reports coming out this morning? For some odd reason, I can't. It's not doable. So if you can let me know, I'd appreciate it. And if you look at the chat box window, you'll see the levels there for everybody printed there for you. Bonds falling off here a little bit after getting up to a 125 handle. Very nice rotation there in the bond market. Okay, here we go. I got it now. I had the wrong. Yeah, there's factory orders coming out here at 9 o'clock. So the 10-year had went up to all the way up to over 4%. It's back down to 390, probably a little less than that, and just coming off here, probably in the 380s with that little rally, but just come off just recently, just now, as you can see. But a nice rally, recovery rally there. I don't know if it's going to continue or not, but it is what it is. Let's see. As we kind of just hang here in this little range after we got triggered against our 65 area on the upside. And now we're just kind of hanging here. We did get back down, almost down to 58, which I suggested we would cover any shorts if you still had them. I'd say the market has had a wild 2 months of the year, firing on all cylinders in January and pairing some gains in February, only to resume the upward descent last week. Friday, was it? Well, Thursday, Friday. Investors are now seizing up their outlook, sizing up their outlooks as trade begins for the first full week in March, with several upcoming catalysts that have potential to sway market directions. On Tuesday and Wednesday, Fed Chair Powell will head to Capitol Hill for a semi-annual testimony. Great. That's great. When is that? Tomorrow and Wednesday. Great. Hate it when the Fed. I hate it when they're talking. So be careful if we're going to be trading tomorrow and Wednesday, because they always have that question and answer session. It's just you never know what he's going to say. You never know what people are going to deduce out of it. Well, whatever. So be careful. Let's be careful. And then we have the jobs report on Friday. And then the consumer price index will be published next week. So we'll see. And then the Fed's policy of meeting is going to be at the end of the month. So a lot of stuff that will affect the market, especially Powell's testimony tomorrow. And so you'll see what if he remains as hawkish as he has been, which could send the market back down, or if he lightens up his hawkishness or not. So we'll find out, I guess, tomorrow. Nothing like having an F day tomorrow and Wednesday. Ugh. Okay. All right, we are just kind of hanging here in this range after we rotated off of our 65. We're flat. We had a little resistance at 65, which we hopefully were able to take advantage of. Now we come back up here. We're looking at the 74 area next. If you were looking for a buying opportunity, it was probably around our pivot area there, but we just did not get down back to it. We got down to right around 59 there and then pop back up. But gave you a chance there to get out of our 65s in a nice orderly manner, considering we took no heat on it. And so that's good. If you put the orders in, you have to place the orders in the market, right? I mean, I know it's sometimes a little bit risky, but your orders have to be in place so that when the market gets up to a level, you're not kind of deciding whether you should get in, you shouldn't get in, because you really don't know. I mean, I've tried that route. Don't worry, it doesn't work. You got to believe in your levels and then kind of put the orders in place. And then if we get stopped out, we get stopped out. We'll look for the next opportunity. But when you see how the market popped up like that, gave you a chance to get in, if you had your orders in place, and then came right back down. So we'll see what happens. But that's how those are levels in there that, as long as you believe in the levels, it's good to place the orders in place so that when the market rotates up to it, you're not trying to say, okay, I think the market's going to stop here. Are we going to get run over once in a while? We will. But that's why you put your orders in place, your stops in place. All right. Let's see here. We do have factory orders coming out here at 9 o'clock, so keep that in mind. Okay. 9 o'clock, a little number, and that's about it. There's not even any. I guess they don't have to talk when Powell's going to be talking tomorrow. So these called the Humphrey Hawkins meetings, where it's about twice semi-annually. Bonds here continuing to have a little bit of a hiccup to the downside. Nice rotation there in the bond market. Again, we don't trade the bonds; they seem to be, but we just kind of keep them there sometimes to help us, maybe give us an indication what's going to happen. You know that sometimes we've seen that. I should say that we can follow the bond market for a bit, and then they trade together, and then all of a sudden they kind of go their own way. So let's see here. Right, so we have a number at 9. See what that comes out with. Um, the jobs report could be the biggest talking point of next week after the Federal Reserve governors warned interest rates may have to be raised more than expected if economic data comes in hot. Investors will also be paying close attention to Treasury yields as 10-year note after its flirtation at the 4% level on the political front. The White House expected to release a proposed budget on March 9th. The proposal could have implications for some defense stocks, depending on funding levels, and eventually working out with Congress. Meanwhile, earnings reports have slowed down a bit this week, so that's not going to be a big part. And we'll have to look for the jobs report. The February jobs report could have a huge significance following the January blowout number of 517 jobs additions. The consensus estimate for this month is 215,000 for non-farm payrolls to be added to the economy, but a lower number could shift the narrative on if the January print was a one-off. The unemployment rate is expected to hold steady at 3.4%, and a 0.3 month-to-month bump in hourly earnings is anticipated. The hourly earnings number is what the Fed looks at for inflation. So they did have a big blowout number last month, 517,000. We'll see if they make. So you have to be careful when you're not going to be trading the number, but what they do is that they come out with the headline number, which is 215. That's what people are looking for, and then they make an adjustment. The next number that comes out is the adjustment to last month's. So sometimes you get a bullish headline number, and then the adjustment is bearish, and they trade off of the adjustment because sometimes the adjustment is bigger an adjustment than the headline number. But we won't be we won't be around at that point. So one time I got caught on the bond market when when the original number was bullish, and then uh, vice versa on the adjustment, and I got caught there. It was not a pretty day. Not a pretty day. So that's going to be coming out on Friday. I thought it was going to be last Friday, but I guess because of the short month in February, they pushed it off till next week, this week. All right. So that's coming out on Friday. They're expecting 215, but like I said, if you're going to be trading early on, kind of be careful of the first initial move, because they usually will wait for the. You got to check out the revision, is what I'm trying to say. All right, we went down to our blue band area there, right around the 58 area, which is our pivot. Again, I suggested if you did want to get long there, that might have been a place to get long. And a nice little quick rotation. Now, those are price action plays that are out there. So yeah, there's different opportunities. And that was one of them. All right. So we're just kind of range bound here a little bit. We'll see what this number does here at the top of the hour, see if it gives us any opportunity. All right, range bound here a little bit again. Sometimes we just have to be patient and wait. And I said earlier, we average 4 or 5 trades a day. So average is a good number. And sometimes we get more, and sometimes we get less. It all depends on volatility. The VIX is down to an 18 handle, and the higher the VIX, the more volatility we get, and the lower the VIX, the less opportunity we're going to have. Just seems to trade a little bit tighter when the VIX is in this little range, or it gets low like that and doesn't really move as much, and we have to be very, very patient and wait for opportunities. All right, we're just very quietly in a range here, even though the bond market did break off a little bit, but we did not follow, as you can tell. We do have a number, see what it does to the market. We're just kind of hanging up here in the highs. Next level on the upside resistance is up at the 74 area. But as you can see, we're definitely range bound here. All right, so we are definitely range bound. Let's see if this number is going to create some volatility or not. Not a big number, but you never know. You can see the ladder ticket right now, all 100 lots up and down. You're making a big statement by saying the way things are moving. I don't think they're moving. Hey, we got our 65 triggered, so and it came and retested it, but otherwise, it was right off the morning too, so it was nice. Yeah, sorry. All right, number is out, and it's getting a little whippy here. Nothing, not extending the range or anything. Just chopping around. All right, we continue to kind of just stay in the range, and look, we are definitely dependent on volatility, right? So patience is important, and waiting for the market to give us that opportunity. All right, they are just stuck in a range, unfortunately. All right. Again, if anybody has any questions, good time to ask. Yeah, obviously, our opportunities are going to be minimized here with the fact that we can't really go far. It's just not going anywhere. So consequently, we have to show a little bit of patience. Again, if anybody has any questions, feel free to ask in the chat. Especially when it's slow like this. Don't mind questions. All right. Well, we're trying to extend here a little bit to the upside. 74 area there is our next level of resistance. We did again suggest a little buy there earlier around 58, but we got down to 50. Well, we got down to 58 and change, but not to 58. That was our pivot. Got down to 58.75 there, bounced back up. Next area that we're going to focus in on next is the 74 area. I kind of got tired of just kind of hanging out in this little range, and then decided to extend here a little bit. So we'll see if we see what it wants to do, and if we do come up here to the 74 area. All right, quickly rotating back up here. Whoa, that's nice. All right, man, we are really being really nice to us today. It's just obviously if you had 74, you didn't get to 74, got up to 375. But again, like I'm scaling in around there, and hopefully so are you. Quick, easily 3 points against the 73. Even if you got up to, if you put the scaled in at 73 and a half. Again, everybody scales in differently. Like I keep saying, the volatility is important, and you're not gonna, you can scale in around the 73 area, 74 area, because we're not going to be perfect. Just like I mean, last time, well, the 65 went up to 65 and a quarter. Okay, so this time that one you got filled, but here we got right up to 63, 73, 75 there, and then bounced off. Again, hopefully you were able to scale in around there someplace, and quick rotation off of it. Wow. That's twice. That does not happen. For those of you who've been here, are here all of first time, it doesn't always happen this way. That's all I can say. I wish it did, but it doesn't always happen this way all the time. And again, you got almost, I said it from the first time, you got to have your orders in place. So when the market goes up to a level or down to a level, you are ready to take advantage of it. And then if we do get run over, then you just get stopped out and you look for the next opportunity. But again, you saw how it got up to the level and then quickly rotated off. So giving us a good, quick, fast opportunity with very limited to no heat. All right, we're just now kind of hanging up here again. We got right up to our area there at 74. At the first level there at 65, we got up to 65 and a quarter and then rotate off. This time we got up to 73, 75 and rotated off. So again, we always talk about entering your orders around a level only because we're not going to be perfect. And this was a perfect example. That's why we scale in around it. And like my scale, I like to prefer to get in at 73, 74, and then 75 if I trade, that area. Some others are trading 73 and a half, 74 and a half, depending on your risk tolerance. Everybody here has different risk tolerances. And if you did leave your order in at 74, obviously you didn't get filled, and it would become a lot more tenuous now that you didn't get filled and we rotated off and we have opened up a new bar. So I would, if you just left it at 74, it'd be a little bit, a lot more riskier right now to leave that order in place in case we go back up there and retest. Could we go back up there and retest and it work? Absolutely, but it's a lot riskier. So we just try to explain the risk here, and then you have to manage that risk on an individualized basis, not on somebody else's risk tolerance.